From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 9th, 2017. In just a moment, we'll be taking a look at the AUDUSD, the Australian dollar, versus the US dollar for today's trade analysis, but I want to recap a couple of the trade suggestions made since yesterday. Starting here on the NZDUSD, New Zealand dollar, US dollar, we actually in the live trade room have been discussing selling opportunities on this currency pair since last week, selling on the convergence of several different trend lines. The rising blue trend line, we were underneath there, and the falling red trend line, where we were underneath there, all the way up here into the 73, 30s, and 40s, the pink shaded area up here at the top of the chart. So we saw that. We found a reasonable expectation of resistance, Fibonacci in there as well. So a couple of times over the past 2 weeks, we've taken into shorts. Even prior to yesterday's news out of New Zealand, the interest rate news out of New Zealand took the shorts there. And then you can see the trade going at the very bottom of the chart. 73.30 was our short. That is up there underneath the pink shaded area. And of course, we have been capturing profit on the way down, sitting currently about 110. We've seen, I believe, nearly 140 pips of profit on the trade. I have locked in with the stop loss, closed a few of the lots, and of course, it has been a phenomenal trading opportunity. So hopefully you've been able to take advantage of that. At least at the current moment, I see no reason to close the trade. We'll just continue to follow it as long as we can. Moving on over to the USDCHF. Yesterday's morning analysis video actually was focused in on going short at the resistance underneath the parity level. Well, if you were able to get into it, which I actually didn't because by the time I put the pending order there, it had already fallen off the pink zone, but we were talking about selling the pink zone down to the blue zone. Well, it did that. Well, if you watch yesterday's morning analysis video, I also discussed the possibility of going long at the blue shaded area. We have a couple of different things there. We sat on top of the longer term downtrend line, the black trend line. We sat on top of the red trend line between 99.40 and 99.60. So that actually gave us an opportunity not only to look for the sell from the pink zone yesterday, but the buy from the blue zone. You can see I have the buy 99.60, top of the blue zone. Had to endure it dipping down to the 40 level, but continue to pressure higher, now back into the parity level, the 99.90s once again. Here's the main question of the day. Do you want to go short here, or are we going to finally see the US dollar break through that parity level and go higher? I think 1, 2, 3 times, I'm not looking to go short. We've challenged this too many times. The sellers are likely starting to get exhausted, especially if we get some positive news today out of unemployment claims with the US. We may be looking for the breakout. So I'm not looking to go short again. I'm going to hold through the longs. I've already closed some profit on there, locked in with the stop loss. But I'm going to hold through and see if we can get some positive news out of the U.S., at least another boost for the U.S. dollar, pushing through 1.0 and maybe heading back towards 0.050 or 75. Don't buy it now, but if it breaks the pink zone, then maybe you look for another opportunity to go long. If you're just looking to go short, this is about your time to do it right here on the dollar franc. Now, I want to remember this. The downtrend line, the black trend line, the rising red trend line, showing us some evidence of reversal here for this pair. It's been a downtrend. We're above the black trend line. We see a rising red trend line. Maybe it's a short-term period of reversal for the dollar franc. I want you to remember that as we go over here to the AUDUSD, the Australian, versus the US dollar. Obviously, this currency pair has been in an uptrend. The blue trend line shows it's an uptrend. The green trend bar shows it's been in a bullish trend. So all of that pointing to uptrend right now on the dollar, Australian dollar. Now, let's remember that picture from the dollar franc and flip it upside down. Here we can see the blue trend line, but if we get down to the 4-hour time frame, we might be starting to see some evidence of reversal. Let's go ahead and take it on down there to the 4-hour time frame, and I'm going to take another trend line and put it in here like this. So again, if you look at it in this vantage point, and let's make that trend line a different color just so we can tell the difference between the two. We'll just make it red. And so you see the falling red trend line and the rising blue trend line. We're under the rising blue trend line. We're under the red trend line. So it's, again, that dollar franc picture just flipped upside down. So for the day today, as long as it's underneath that convergence of trend lines right into the 76.50, 55 level, I think this is better opportunity to go short. In fact, it doesn't give me any confidence to go long right now. We're running in, think of that X marks the spot. Think of that where the two trend lines come together, the orange shaded area. We've seen historical resistance and support here before. Think of that as a big brick wall in front of the market. And so far, the market has been unable to break through that brick wall. So what I would say is, even if you were considering going long, this is not the time to do it. If you're looking to go long, you would actually prefer to do that down here closer to the purple shaded area. Get away from that barrier, get away from the resistance high before you would go long. So not the time to go long, but potentially on an intraday basis, an opportunity to go short, looking for the targets back down to the purple zone or lower, and maybe even further reversal here. And that's pretty much what we did with the New Zealand dollar on that reversal, the convergence of trend lines, the dollar franc on the rally from the support and the convergence of trend lines. So here we are again, convergence of trend lines and potential opportunity. If anything, we know that this is the ultimate resistance high right here, the blue zone. So you're very close to the resistance high, multi-month resistance high going all the way back to December. So we're at the top of the trend. So difficult place to go long to begin with when you're at the highest high. If you're going to go long, you want it to be at a lower low or at least break through that highest high. So for me, it's not a place to consider going long, unless we get a breakout above maybe the blue shaded area. That changes my mind. Above the blue zone, down to the purple zone, those are the opportunities to go long. Until then, short-term opportunity to go short, looking for some intraday reversal. Again, keeping an eye on the U.S. unemployment claims today. That could be a game changer, but definitely at this point in time, definitely watching for some bounce off of this 76.50, 76.55 level for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.